time to maximize profitability and cash flow. It's time to learn habits and hacks from the best e-com CEOs. It's time for Return on Podcast with me, Tyler Jefcoat. Hey guys, Tyler here from Seller Accountant, and we've been walking through how to use your balance sheet and your profit and loss statement, your financial statements to make good choices, to understand how your business is performing as an e-commerce seller or brand owner. The first few videos were really focused on that P&L, that profit and loss statement, walking through revenue, cost of goods sold, and expenses. In today's video, I want to start thinking through how to use your balance sheet. Most sellers are less comfortable with their balance sheet. It's a little bit of a stranger statement. So what I'm going to do here is I'm going to give you 3 crucial principles to help you understand how to think about your balance sheet. And then we're going to walk through an example or two so that I can show you what's important, what to keep an eye out for, how to use the data that you're seeing in your balance sheet. Let's dive in. All right, so principle number 1, this is a little bit of a reminder, but we have this basic numbering system in the kind of conventional US GAAP accounting. At Seller Accountant, we use something that looks like this. Your assets are always 1, liabilities are going to start with a 2, owner's equity 3, revenue, cost of goods sold, expenses 4, 5, 6. My point in saying this is that I want to help you avoid confusion. Almost every business that we serve at Seller Accountant has inventory. And so there is an asset account called inventory. Almost every business also has an account that's under the cost of goods sold section called inventory adjustments or something like that. If you don't understand the basic logic of your numbering system, you'll get those accounts confused. And let's say you are doing your own bookkeeping, you'll end up putting things in the wrong bucket. And so here's what I want you to do. You do not need to memorize my chart of accounts or anyone else's, but you need to have a clear logic in your books, and you need to make sure that you understand. Like if you did nothing else, like if you're one of Seller Accountant's customers, if you did nothing else but just memorize these 6 basic categories. Okay, 1's always assets, 2's always liabilities, 3's owner's equity, and so on and so forth. If you just did that, it would avoid so much confusion and the likelihood of you making kind of a boneheaded error and putting something in the wrong bucket that kind of blows up your entire accounting goes way down. Principle number 2, when you look at a balance sheet, think about it like a net worth kind of statement. So think about an asset like I own a house, right? Maybe I own a house and the house is worth $500,000 or $500,000. But I also have a mortgage on the house. I owe some money to the bank for $250,000. Well, what is my actual equity in the home, or what is my net worth in the home? Well, it's that asset minus the liability equaling what's left. And so a balance sheet is exactly like that for your business, where your assets are what you own, your liabilities are what you owe, and your owner's equity is kind of what's left over. Now, if you ever hear the phrase kind of tossed out there called book value, the book value of a business is the owner's equity. It's just what are the assets. If we were to liquidate this business, we took all the assets and liquidated them and paid off all the debt, what would be left? That would be the book value. Now in e-commerce, you would almost never use the book value to actually value the business. It's not the way the market works. But if you ever hear that term, that's what book value means. So that's the second principle, is understanding that the balance sheet's kind of a what you own and what you owe. The third, and I think this is so important, guys, listen to me on this phrase here. Your books are BS unless your BS balances. In other words, if you look at your profit and loss statement and you're like, oh, wow, I made a killing last month. But when you go to your balance sheet, it's not reconciled. You cannot trust that profit and loss statement. This is really, really important. I can't tell you how many brands that I've worked with that have made really perilous decisions thinking that their profit and loss was saying one thing, but only to realize they hadn't actually finished the drill. They hadn't actually reconciled their books. And so when you hear the term reconciliation, that's literally the kind of science, the art and science of going through your balance sheet and making sure that each account balances. So literally, this is not as complicated as it could sound. You have a checking account. We literally, for the one that's on the screen here, should be able to go to October of 2023. We should be able to pull that October 31st bank statement, and we should be able to look at that Chase account and have it be this exact amount. And so, there are some accounts that are hard to fully reconcile, but all of your bank accounts, generally speaking, all of your loans And then within some degree of error, your inventory can be reconciled, and they have to be. Normally, the best practice is for credit cards, loans, and checking accounts to reconcile them every month. Again, it's just to make sure that we're not believing our own BS, right? That we have really valid financials. For something like inventory, where we may need to do a hard count, we may only reconcile that once a quarter. So let's look at the asset side of this guy's balance sheet here. You can see, again, we've got some cash. We've got some other cash accounts. We've got our PayPal. We've got a different account for the PayPal for the Canadian currency. We've got some small accounts receivable. And then we have our inventory and we have our clearing account. So clearing account is kind of code for accounts receivable, but for an e-commerce channel. Because if you think about it, Shopify is not, or Amazon or not, like those kinds of channels are not your traditional customer where you send them an invoice and they pay you on that invoice. You're selling on their marketplace, or with Shopify, you're selling through your website, but on their shopping cart. And there's just some amount of money that they owe you at the end of a month to make right on the sales that you have already sold. And so your balance sheet is not good if it doesn't include some kind of receivable for every channel that you sell through. And so this is really important to make sure that you have either a clearing account or a receivable for every channel that you sell through, because that's how you know you're accruing the sales properly. One of the things that I look for as a CFO, if I'm kind of grading a balance sheet, is I want to kind of look month over month and try to look for things that are weird. Like, I'll give you an example of something that's weird. If an accounts receivable balance, like the one we're looking at here, doesn't change month over month, that kind of makes me wonder, is there a story here? Do we literally just have one or two customers and they just hadn't paid us yet? Or is there potentially an accounting error? Now, in this case, it was correct. Nothing to worry about. Go down here a little bit further. If we have an account that's always zero, like undeposited funds, what the heck is that? And all of a sudden it pops up a balance. That tells me that there may be an error there that needs to be corrected. In other words, I would encourage you to kind of look for trend lines in your books. Like, I can't tell you how many times I'll look at a set of books and, all of a sudden inventory goes negative, right? And you're like, wait a second, you can't have negative inventory. What's going on here? And it just should prompt you to ask your accounting team some questions. Another thing here is if you have a random asset like this one, uncategorized asset, and it really isn't moving very much, like, what the hell is this? Like, this would be a set of data that would make me want to go talk to my accounting team and say, hey guys, not sure I understand the story here. Can you help me understand why we have an uncategorized asset that isn't really moving? Give you another example of kind of an asset side of a balance sheet. This is one where, again, we have multiple currencies. So we have several different PayPal accounts. But you look down here at one of the bottom accounts and we have a bunch of months in a row where our Wise clearing account is negative. Why is that? Why is Wise being cleared weirdly? And it turns out that there was an error here where that money had been transferred out but wasn't being booked correctly. And so you can see the most current balance sheet, we've corrected that error. See if I see anything else here that's worth talking about. You guys already told you about inventory, or told you about clearing accounts. Okay, here's another one that you'll see is a really common error. If I have a fixed asset on my balance sheet, now this could be like a truck or a forklift or something that's literally a physical asset, or it could be I bought a business and I got some goodwill in that business. I paid more than the book value of that business, and so I'm having to book some goodwill, right? But the problem is especially if you span a tax month like this balance sheet does. I went from December to January, and wait a second, my amount of accumulated amortization didn't change. That tells me there's a problem here. We're not properly expensing this asset off of our balance sheet to kind of work through it. And so again, if you see accounts like this that are not changing, probably time to go to your accounting team to say, hey guys, what's our schedule for properly expensing this asset down to zero? So going to stop right there. You need to pay attention to the balance sheet, and in particular, you need to understand how to have your receivables be booked correctly and how to understand when to depreciate or amortize fixed assets on your balance sheet. In our next video, we're going to dive into the liabilities and owner's equities part of your balance sheet. Stay tuned until that video. Take care.